Hi everyone, let's do a market update. Currently, what we're looking at now in the metals is a little pullback. We're looking at silver right here. I still like silver. Um, this was a huge candle right here, coming up into prior price area. We got as high as the tops of these candles, not to be expected. We found supply and sold down. This was 1739. This is pretty high of a price for silver at present, given how strong the dollar is remaining. Um, and silver is the more speculative of the two metals between silver and gold. So really, the metals are looking like momentum plays. We got some strong upside momentum that carried through, ran into some supply and sold down. Had an inside week, and now we're having an outside week. We came out of the price action of this candle, and now we're flushing all the way down. I have no position on silver. I have a small long actually on silver that I'm holding for June. This does not scare me at all. In fact, I'm hoping I get lower prices. I'd like to see either the bottom of this candle or the bottom of this one. This would be a very deep retrace, but likewise, it is a buying opportunity in my opinion. This is if you believe that, especially the dollar is going to weaken. This would set up right around this area, 1621 or so, sets up the inverted head and shoulders pattern. And that's a very explosive upside possibility. The 50 week is right around 18, 17.9. That's by no stretch of the imagination out of the question. I think we do need to see some more time here. Inflation simply hasn't yet taken hold. The Fed was sounding tough, talking tough in their meeting minutes that were released today. They were talking tough about holding strong on inflation. This is nothing more than a bluff. How do I know this? Well, the economy is not that strong, and the Fed's primary concern right now is inflation. Um, and by talking tough, you hold down oil prices, you hold down commodity prices, and you give the real economy some room to breathe. Stocks are proving completely and totally impervious to rate hike talk. A rate hike would not be all that bearish for stocks right off the bat. Um, this is a weekly. Stocks have been volatile, so look at weekly charts, please. Don't look at dailies. Dailies are all over the place. Even the weeklies are getting very choppy. So volatility out there is really picking up. Um, I have a half position on the S&P, long term only, and I will sell into strength. I do believe we're going to see a minor new high at 2150 or so, maybe even a little higher. Although at this point, 2150 is not that far away. This has been a huge week. We've regained some key moving averages, as you can see. The 200-day is still rising. We did not, I believe the 200-day and the 20-week are roughly the same. 200 days down here, we really didn't even threaten it on the last move down, whether it was this move or this move. We found support in the cloud, came back up out of it. That's relatively bullish. The daily MACD is about to cross here. I don't have the Stotch on here. I think the Stotch is going to show you that this is not a swing trading market, by the way. This has turned into a day trading market. The Stotch getting all choppy like this in the middle of the bands is no good. Don't trade that if you're a swing trader. Um, looks like it's headed up, but at any point it can turn back down again. No one really knows. The saying in Wall Street is sell in May and go away, and I think you're going to see that this year. I think June, July, and August is really going to be crunch time for the markets. There is simply way too much uncertainty in the markets internationally, especially with Greece. Russia's doing some strange things, Iran's nuclear program, but especially Greece, which will almost certainly be a credit default event. Greece just borrowed $1 billion in the short-term debt markets. This is an act of desperation. They are borrowing short-term because they can no longer borrow long-term. Their long-term rates are 30% and over. They can't borrow long-term. They are, in effect, shut out of the long-term debt markets. So Greece has already begun ignoring their long-term debt. And they're continuing to borrow in the short end of the curve only, the short yield, short-term treasury bills. This is very, very ominous. First of all, they shouldn't be borrowing anymore at all. They should be focusing on um, reducing their debt, opening up, completely liberalizing their economy, going pure capitalist, having as low taxes as possible, and letting the economy run as hot as possible. Um, they are borrowing in order to roll over debt. They are borrowing in order to pay their credit card bill that's coming due. And their credit card bill is only 640 million euro. In June, they have a 7 billion euro payment. And they just borrowed 1 or 2 billion euro, I believe. So this is just not going to work. If you're borrowing a billion euro in order to pay a 600 million euro loan, you got a problem. They are quickly running out of money. They're on life support. They've got 3 to 6 months. I can't tell you which month, but they are going to default this year. They are borrowing in the short-term treasury market because those are the only rates they can afford to borrow at. And they're not going to pay that money back. That's going to default like the rest. They're going to default completely across the spectrum. Any suggestion to the to anything alternative to that is silly. If you follow Phil Menzies, Phil at Phil Stockworld, pretty good trader, pretty good market barometer. I forget Phil's last name. His website is philstockworld.com. He gives some pretty entertaining daily commentary. Phil has done pretty well for himself over the years in the market, and he has gone to all cash. The last time Phil went to all cash was in 2007. He warned for the entire 2007, and he was wrong right up until about August. And you may very well see a repeat of that this year. Phil does not run out of the market easily. This is how he makes his living. If you go to all cash and your day-to-day life is paid for by trading stocks, that says something. He's still making small trades in the market, tactically, here and there, but he's no longer managing a short-term portfolio. Short-term is all cash, I believe. He does have a long-term portfolio that's still in place, but I believe even part of that has gone to cash. So this is one of the signs I try to keep an eye on when the traders that you found are effective in the past are saying and doing things that are worrisome, that are indicative of larger danger. You want to pay attention. I'm not liquidating anything yet. I think we're going to see a higher move in the S&P, but when we do, I will liquidate. I am not chasing the market up. You don't want to chase anything in this market, quite frankly. This is not a market that's going to reward you for chasing. It is going to punish you for chasing. Badly punish you for chasing. So if you see a deep retrace in something and you want to take a gamble, you want to throw the dice, go ahead. But to say that you're going to trend buy, swing trade, I wouldn't recommend it. Qs are still okay. They're having an inside month. Everyone's saying the Qs are strong. I don't see it. The monthly MACD is rolling over. You can get a little punch up here. Look for any rally to fade or roll back down or roll over on a monthly basis. No one's patient enough to watch the monthly. The monthly is extremely important here, okay? Extremely important. When the bottom of these candles here are lost, these three right here, these four, it's going to mean big trouble for the Qs. Okay, had a one stick save right here, big stick save. This is a pretty confident to go long on this month, of course, but over here, I'm not feeling it. We could push above, certainly, but it feels like the market's running on borrowed time here a little. The IWM daily looks fine. Let's go check the weekly and the monthly. RSI looks fine. Let's just have a look at the MACD. Not that the MACD has been all that great. This is doing well because of the strong dollar. People are able to purchase more domestically. So small caps have been the benefit of that, the benefactor of that. That said, still having some inside weeks here. And the monthly, again, curling up, looking better. Small caps are leading. It's one of the reasons why I'm not selling yet. I see no reason to sell yet. Apple, market darling, trading like an ultra strong bond. I mean, Apple is just not giving much back. And when it does give much back, it leads to these catch fire massive rallies. I am not bearish on Apple. I'm not buying here. We're in the cloud. We can retrace down to the 100-day and go sideways while the 200-day catches up. No reason to short Apple unless you want to throw the dice. This is the Treasury rate, 10-year Treasury rate, the rate itself, not the Treasury bill. And it's putting in some interesting candles here. It's not bullish. It's not all that bearish either. We lost support at the bottom of this candle and then came back up again. Rates, I think you may see creeping up. Possibly. It's also possible we break down. We're in no man's land here. So expect a break up or down. But I don't like treasuries. I have a good feeling. I have a strange feeling that at some point this year or next, treasuries will fall. The treasury bill will fall, and the treasury rate will run up and pinch the Fed and force it to ease because the higher interest rates are just too painful. That hasn't happened yet. We had a huge run up in March. Of course, the Fed was talking tough that it's going to raise rates, and then we found out they're full of hot air. So the treasury market is treasury rates are kind of on hold. They're kind of on standby, and they can fall until the Fed finally calls its bluff. This is a tell I want everyone to keep an eye on as far as the S&P goes. This is the 12-month average, and the 12-month average is eventually going to get on top of these candles, okay, as it did back here. And when that happens, now look, we had 3 strong months here, right? Scary month, followed by rally, 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 and then ominous. Now you're under the 12-month. Now the 12-month acts as resistance and slams you down. Another couple of happy months, hey, no problem, and then slam down again. We never regained that 12-month. It's rolled over at that point, and you're in bear country. So we're okay right now. We're not even near that 50-month, that 12-month moving average. But we did lose it here. And we came kind of close, touched it again here. We're not comfortably above as we are here. So I'm watching this closely. I'm expecting some month to look like this, to reverse down and touch it. We had a close call here, and obviously we reversed down here, but had a massive stick save. So I'm expecting some type of reversal in the next few months. Don't know if we get any kind of serious market correction. It may not be until September or August. September or October. August may be all right. Right now the market's holding up. It's not wildly bullish, but it looks okay. So like I said, I think we're going to see a move to 2150. Doesn't have to happen. And I think it's going to fade pretty fast. And then next month I think we're going to run like ass and come down and test the bottom of these candles, 1970. We have not tested yet. This is a pretty key area that the market really needs to test. We've had a lot of price action around it. 1, 2, 3, 4, 5, 6 months have, I'll give you a line so you can see it better, have been around that 1970 mark. And that's a good little band. It's not perfectly 1970. It's 1989, 1990 to, 1950 or so. There was a lot of indecision around there, and we squeezed higher instead. One more push higher would really bring in the retail trader and make everybody a believer. And the action after that is critical. If we fail off it, bounce, lose momentum again, and fail, you want to stay out of the market entirely. That's a pretty ominous sign. With Greece defaulting almost certainly, and the Fed being in the corner because they're pledging to raise rates at a time when they may be forced to ease, is difficult. They may very well, as a friend of mine suggested, as a colleague suggested, they may raise rates in order to save face because they said they would, thinking it won't be that bad, that a quarter point the economy can handle, and the stock market's going to show them who's really in charge. It will all but crash, and you could see a move from 2000 and change to 1850 pretty fast, and from there to 1750, and you will see phones ringing at that point. Someone will be told to do something in a hurry. Um, so at that point, the Fed could turn around and back off their rate hike, or else they could move to other easing measures, meaning a QE program, even with the rate hike in place, or else tackling bank lending, giving banks encouragement to lend. Um, so anyway, moving on to the metals, we're going to see, I like the weekly here because the daily's been pretty sloppy. Again, we're setting up for inverse head and shoulders. Gold can fall quite a bit here and still be on sides as far as a head and shoulders pattern, as far as looking for more upside. It's got a gap down here at 113, 114 is a good area. I don't think gold buyers are going to sit on their hands and watch gold fall. I think they're thinking about 6 months down the road. The selling has been light. These are tiny bars, tiny sell bars. The buying's been pretty strong. And I don't feel like gold is going to fall that much. Silver is taking the majority of the pain here. The gold MACD weekly still crossing higher. Looking at the Stotch, gold is getting hit overnight, by the way, so this is not including that. Stotch is still rising. That's a great sign. We have a solid candle here, which can be a sign of a trend change. We ran up, came back down. Again, there's just not enough inflation to drive gold higher right now. You give it a month. Give it two. Let's look at this at the end of June. At the end of June, are we going to be at new lows? I don't see it. I don't see it at this point. You've got 1, 2, 3 green candles here, 3 strong weeks. This is blow off. There's not enough support here. This is just bloop, and it failed, because that's what blow offs do. A little parabolic move. Overthrow came back, and stabilizing here. They're not. This candle was never lost. This candle was never lost. This candle's strong, and now we're still holding above last week's high. We're holding above last week's close in gold. So gold is not looking all that weak. This candle is, the price got ahead of itself. It's got to come in and tighten. It's got to wait. If you just add Bollinger Bands to your chart, you'll get a better feel for where the median price is. We came down to almost the bottom of these Bollinger Bands. What happened? Here, price corrected back to the middle. Here, price corrected back to the middle. So we got to chop around the middle a little bit, as we did back here, which I expect another 2 weeks, another week or two. It doesn't have to be 2 weeks. It can be a week. It can be 10 days. It can be 3 weeks. I honestly don't know. And from there, move up again as inflation starts to again appear, as I feel it will. Beef prices were up 15% in the very first month of the year. That's pretty big. Looking at the slower Stotch, it's likewise turning up. MACD looks fine. Look at a monthly. Monthly is where I see my tells, quite honestly. I don't like to run against the monthly. The MACD is crossed. You can see the value is 659 to 638. It has crossed. It is moving higher. That's not as big of a cross as I like to see, but it's a cross. The Stotch is rolling over a bit, so that's not the best sign. But it's not cratering. Let's zoom in here a little bit. We're having an inside month. Well, outside, inside. We came outside the price action and came back in. So I guess technically this qualifies as an outside month, although a true outside month goes all the way outside the price action of the previous month. We are holding this big buy tail. You're a bull, that's what you want. The rest, you don't really care about. So if you're going to swing trading gold looks possible here. Swing trading stocks, I don't like it. You got to have a strong stomach. You can, but I just don't recommend it. It looks like a for professionals only type of market. It doesn't look like something amateurs and I mean people trading even 5, 6, 7 years, are going to be able to navigate. Even the pros I follow are scalping the stock market. They are not um, getting dainty, so to speak, with their trades, not getting cute. You get cute in this market and you're going to get hurt. And remember, the first goal is not to lose money. You really want to prevent yourself from losing money if you can help it, if at all possible. So I like an outside month next month for gold, right? We came down, came back inside the previous month's price action, came outside, back inside the previous month's price action, come outside as possible in May, followed by a bullish engulfing. I'm bullish on gold, so that's what I envision. The other possibility is that this sell tail leads us to another flush lower to 112. That would be painful for bulls. That's not something you want to see. But with the weekly, we're now early in the month. It's early in April, so April's got 3 more weeks left. We are by no means over. In another 3 weeks, we got to look at this and see where we are. This can be outside the price action. But I'm looking for next month for the lows of 114 to hold. How high we go from that, I don't know. To get half of this candle is not unusual. Okay, we never came to half this candle. Usually you see half the previous month's candle. Like in here, we sold down, came back up. We overthrew the middle of the candle and then continued down. Same thing up here, came up and continued down. Came up here, held above the previous month's price. Next month, tested the bottom, tested the high, the last price, the closing price of this month, and monster straight up. So now we've come back. We tested a little overthrow. We tested more than half this. Now we tested the bottom, held it. So I'd expect to claw our way back to about half this candle. We about got there with the top of this candle. This is important because there's supply there. People that bought in here, right, they got hosed in this month. People that bought over here, they got crushed if they held on. So we got, the higher we climb in this candle now, 3 months later, we get to see what the buyers want to do. So I wouldn't be surprised if we jump up and sell down again. Okay, if we jump up to, say, the top of this candle, the top of this one, 118, 119, 120 area, and sell down, and then jump up again and test the top of this at 123, 125. That could happen in the next 2 months. So that's paper gold. Let's have a look at real gold. We've lost 1,200. I'm not happy about that. That's not great. But again, this is with dollar strength and with the Fed talking tough. I don't think that's going to last. I don't have much faith in the Federal Reserve Board. They are using the market. They are playing the market. They're really playing with fire. They're juggling with fire here. This is not something they should continue. They're saying they're going to raise rates. They're going to raise rates. They're going to raise rates. At the same time, they're on hold, and they're remaining patient. The word patient's out, but they're going to be patient. This doesn't make any sense. Market's pretty confused. Gold is running up. Oil is all over the place. It's up 5% one day, down 5% the next day. We're drowning in supply, but people are squawking about inflation starting to take hold. The job market has picked up a bit. Even with a bad employment report, the job market's picked up a bit. I've seen people contacting friends for jobs. I'd like to see gold hold the 21-day. We're at the 50. We got the 20-day underneath, and we have, in the Ichimoku cloud, we have the baseline at 1183. 1183 could be tested. If it is, I'd expect buyers to step in. You can see as deep as 1166. That would get everybody ultra bearish again and set up a squeeze. This could be a shoulder, a deeper right shoulder, setting up over here. Head, right shoulder over here. It's not necessary. It's not necessary to go that deep. I'd like to see, best case scenario, 1189. The bottom of this candle, right here, the low 1189. Another one over here, 1190. In fact, you could see just above 1190, 1191. But we ran into supply twice, 1220 once, couldn't get over it, 1220 again, couldn't get over it. You may see us come down. One scenario is to come down, test the 1180s again, and take another run at 1220. I think the next run at 1220 is going to crack it, and you're going to see an overthrow to 1230. That will bring out the bulls. That's going to change the charts. That's going to make the weekly look beautiful, and then you're going to see it run at 1250 and eventually at 1300. But you want to be patient. We're still rising on the weekly, on the MACD and the Stoch. That's a great sign considering what a nasty week we're having here. So next week we could see. I'm not going to put a trade on this week. I'm going to kind of see what happens if we bounce hard off 1190 and retake 1200. I'll consider a long if the technicals are okay. But otherwise, I'm going to wait for 1180s. Or lower, or the 1170 area. I don't think we're going to get that low. I'm going to start putting positions on in the 1180s. Small positions. Start small. Always start small. When you, I don't say don't care, when you are going out 3 months, 4 months, and you're putting on a small position, and you don't think it's going to be a big winner, and you're not really planning for much to come of it, and you know you're speculating a bit, but the stock or metal or whatever is unloved and it's come into your buy zone and you've done your homework and you like where it is, those are the trades that seem to work out the best. You know, you put on $200, $300, $500, $1,000, whatever your ranges are, whatever you feel comfortable with, and say, well, you know, that's $500 I could lose, and forget it. It's a gamble and it could be gone. But I like the setup, and I'm going to put the money at risk. For some reason, those are the trades that triple. Those are the trades that really make you look smart later on. And when you go back and examine your trades, you'll see exactly that. You'll see, hey, the technicals were good. Everything was rising. This was just a little flush based on news, and things turned back around. The technicals proved me right, and I was right to take that risk. That's usually how it goes. If you trade for a while, that'll be your experience. When the market's roaring, when it's up here, when it's taking this big bounce up here, and you're thinking about going long because it looks ultra strong and you've always loved, you know, this metal or this stock or this ETF or whatever, and the macro trends are lining up, and the Stoch is rising, and the MACD looks okay, and you go in big because you feel like you're going to make a huge trade, and you get slammed down. So start small and get a good entry. Okay, 1220 was a bad entry. There was plenty of supply at 1220. The market really had to prove itself at 1220. And what happened? It couldn't. There just wasn't enough strength. We faded. Everybody was waiting to see what happened. Sure enough, we faded. We did make a higher high. Okay, the high on this candle is 1219. The high here was 1224. That's bullish. Everyone's going to tell you we made a marginal new high and we got crushed. We went higher than last time. We're making higher highs and higher lows. That's not bearish. Okay, so I expect us to come in just a little bit more, not much, 1190 or so, maybe this week, maybe next. Stay patient, and then at some point another run at 1220 again, and see if it can hold. The dollar is very, very curious. Looking at the gold bugs index, this is Hui. Pretty much looks like the rest of gold, but it's something to keep an eye on. Especially the RSI. The RSI was showing some divergence here, so I didn't feel comfortable going long. When this gets above 50 and rises again, that's something to keep an eye on. Biotech looks fine. Silver, again, silver is more speculative. I really like silver because silver trades with gold, and you'll have weeks like this where silver's up 6%, and your call options will just blow up in value. They'll just explode in value, and your account looks like you hit the lottery. But you have to be very careful with silver. You have to trade small, and you have to go out 3 months. Otherwise, you can see this, right? You bought here, market looked good, you were going to hold strong, smash, big reversal, everything rolls over and turns down. Um, so you got to be quick with silver. There's no reason to to get greedy with silver. You really want to, if you really love silver and you really think it has a lot of potential due to inflation, due to its various uses. It is, by the way, antibacterial. They put it on medical equipment. Um, then buy December calls. Okay, you're going to pay up. Hey, that's life. What can you do? But I'm expecting half of this candle to get hit in silver. Again, the bottom of this one, good entry point there. This will require some things turning around in May, June, and July. But the calls will get cheap. Right now, implied volatility on silver calls is outrageous. It's 30% and up, 36%. It's just insane. I have no reason to to buy that. I'd rather sell calls, deep out of the money calls, and let a few weeks pass and collect some premium because that's insane. That's madness. But I'm looking at July calls or September. That's the earliest I'll consider. June, June doesn't look so good. If you want to buy June calls, you can, but I'd stay in the money. Otherwise, August and September, you can buy October calls. You know, this chart can look much different. It can be well into the 18s, 19s by then. I do think silver has bottomed. The other possibility you want to look at is, in fact, if you look at this, it looks kind of like a base. We can even hold this 15 area. And if you want to do the, we lost this area. We made another lower little base, consolidated at the lows, and then came down here. Well, after that, we put in a longer, stronger base. Tested it, it held. In fact, it was slightly higher. And now we could be putting in another one up here. Again, this could be a little deeper. And then you could start to see it stack up. 21 is not out of the question, but we got a long way to go. So I wouldn't be too bullish here just yet. All right, so that's about it on the markets. Put in stops, trade small, and if you're going to get ultra bullish and you want to bet big, we go out 3 months minimum.